Welcome to Crypto Clarified, Investing in the Truth, a podcast series where we come together to discuss the most captivating headlines and trends from the crypto space. My name is Benjamin Dean. I'm Director in WisdomTree's Digital Assets team. I'm joined, as usual, by my ever-brilliant co-host, Camilla Russo, who's founder of The Defiant, thedefiant.io. Cami, how are things?
Things are good. It's a big week for our space with the merge coming up. So it's been kind of all about the merge at the Defiant for the past couple of days and the days to come, I guess.
Yeah, indeed. It's a massive, massive event. If anybody wants to follow it in real time, the Defiant's going to have great coverage, thedefiant.io. Today, though, we're going to take a different look at the space, I guess you could say. We're joined by a very special guest, Claudia Biancotti, who's a director at the Bank of Italy. Before I ask Claudia to introduce herself, in terms of topics we're going to cover today, we're going to cover transparency in the traditional finance and DeFi space. We're going to talk about the current state of the crypto ecosystem, where some problems may reside, like a concept called MEV, which we'll go into some detail to explain. And then we'll try and close out with a few solutions going forward. Before I begin, though, I need to state the following. Shout out to James and Sam. To clarify, the views and opinions expressed in this podcast are those of WisdomTree and Defiant Media and are subject to change. Claudia's views are her own and do not represent those of the Bank of Italy. Anything we present in this podcast is not intended to be relied upon as a forecast, research, nor as investment or tax advice. The information and opinions expressed in this podcast are not a recommendation, offer, or solicitation to buy or sell any securities, and reliance upon them is at the sole discretion of the listener. Please remember that past performance is no indication of future results. End of the housekeeping, let's start the fun bit. Claudia Biancotti is joining us today. As I said, director at the Bank of Italy. Claudia, thank you for joining us. I hope you're well.
Yeah, thank you so much for having me on, and I'm doing great.
It's our pleasure. Usually, Claudia, when we have guests on, we'd like to give them a chance to introduce themselves. How about we kick off just by you telling us a little bit about how you became interested in this kind of crypto space, particularly as somebody who has a role at the Bank of Italy. You could cover some of the work you've done or some of the areas that you focused on, and then we can maybe start diving in from there.
Okay, thank you. Great questions to start with. I've been with the Bank of Italy for 20 years now, and I'm an economist. I've covered several areas in my research over the years, but I've always been very interested in anything that is at the crossroad between technology and economics. So, I was studying neural networks when they were not a thing in economics, etc. And the reason I became interested in crypto is, well, on the one hand, because of the technology side, but on the other hand, because of the cultural side, and I'll explain briefly. I first heard of crypto in 2012, I think, or 2013. A friend of mine who lives in London was taking part in an event where Amir Taki was presenting Bitcoin. And, I've always been interested in subcultures because I find that sometimes the radical ideas presented in subcultures just anticipated mainstream by 20 years, and they shouldn't be thrown out just because they're unconventional. And so when my friend mentioned Bitcoin and Amir, I went, read the white paper, and the whole idea of trustless settlement of transactions just blew me away. So yeah, that's why I got interested in crypto. And I haven't been really working on crypto until very recently. I was mostly working on the side of the economics of cybersecurity and global supply chains. Then this year, everybody was getting involved in crypto regulation at the bank and at the ECB and in international institutions. And I just felt that something was not quite right. Then the market crashed because of Celsius and 3AC, etc. And I saw too many people who were pretty quick to declare the end of the crypto ecosystem. And I was like, no, let's try to explain how we go forward from there.
Nice. Well, it's always nice to see folks who have made the transition from economics into studying the space. Anyone who has an interest in economics and technology usually gets drawn into the space. In terms of discussion today, I'd like the discussion be framed around an idea that's become quite pertinent. You mentioned 3 areas: capital, transparency. Now, we've got a traditional financial system and a DeFi ecosystem that's growing. Cami, When you think about, and we've talked about this before, transparency in the DeFi space, it's one of those characteristics we say is important to the space. What do we mean in precise terms around transparency in DeFi?
Well, I mean, just to point out that the two cases mentioned are not DeFi. So 3 Arrows Capital and Celsius, they're examples of, you know, opaque centralized finance. DeFi is aiming at bringing on an entirely different system where transactions are publicly visible and recorded on chain and can't be messed with. You know, they're permanently recorded on chain, and you have the entire history going back till the start of whatever public blockchain you're looking at. This has its, you know, advantages and disadvantages, of course. Privacy being the main disadvantage here. When you're transacting in DeFi, unless you're doing, you know, using some of the mixers, which are now, you know, at kind of this crossroads, like Tornado Cash, you know, all of your wallet activity is visible. So, you know, this is a reduction in user privacy if your wallet is connected to your identity. But at the same time, it does provide a level of radical transparency that was just never available in traditional finance before.
I always like it when you draw that distinction there, that, you know, what is and isn't DeFi. And it's true, the 3 Arrows Capital, a hedge fund, it's traditional finance. Claudia, how do the folks on like the regulator side or the public policy people, when they look at the events of this year and they say, now we're interested in DeFi or in crypto, are they missing the mark perhaps just because they simply don't know how to differentiate these things too clearly?
I think it really depends on the country, and it depends on the people. My impression is that when it comes to CeFi, especially in Europe, now that we already have this marketing crypto asset regulation, the regulators in good faith who really wanted to tackle the problems have done their homework. And I guess there is an understanding of how transparency should apply. And indeed, there are disclosure requirements for centralized intermediaries that were not there before, and for centralized stablecoin issuers. On DeFi, I would say that we're not so advanced, both because of limited knowledge of the topic and because of some misconceptions. What I think, I mean, the misconceptions are not just on the regulator's side, they're on everybody's side. Because in DeFi, I think there's a bunch of steps that are really hard to understand if you're not the person who coded the protocol. And this applies to transparency in a significant way. So let me give you an example. I won't name any protocols here because I'm not, you know, trying to shield one or the other. But there are popular DeFi trading protocols that have a circuit breaker if there is excess volatility in the market, but they don't tell the customer whether they can their positions can be liquidated during the circuit breaker, when the circuit breaker is functioning. So of course, circuit breakers exist in traditional markets, but you know what happens to your positions during the 1 minute break. One thing is saying DeFi is more transparent because everything that happens is on chain, right? But DeFi also needs to tell me what happens exactly in the event of a circuit breaker, because then again, people see their positions disappear. And when one tries to investigate these things, the answer is this is a product that is still under development. Yes, but you're dealing with, you know, real traders. So this can't be the answer. And at the same time, also very popular protocols, they try to be more transparent. For example, in the case of decentralized exchanges, so the big ones always tell you more or less what's going to be the price impact, the slippage, but it's really not something that is fully understandable to everybody who goes on these platforms. It's still, it's still better than not telling you what's going to happen in case of a circuit breaker. But I still think that when it comes to the inner piping of DeFi, too little is known. Too little is in the white papers. I mean, I'm an infrastructure geek. I really like to read this stuff and try to understand it. And sometimes I find that big chunks are missing. So a final example, in TradFi, all these, back-end stuff in markets is already problematic. Maybe you remember the whole discussion about payment for order flow in the Robinhood case when GameStop had these wild swings. So the problem was the app was selling order flows to somebody else, and there might have been a conflict of interest. In DeFi, payment for order flows, I've heard about it recently. Some wallets are going to be adopting this model. Why do I have to find by chance? Why isn't this, widely explained and publicized? Infrastructure is hard to get right, and it's harder to get it right without conflicts of interest. And I don't see DeFi doing enough for this.
Cami, do you think that's a fair kind of statement to make there, or position to take? That, I mean, there's one piece which is like, not everyone can read and write software. There's a piece like, not everyone has time to do it, and you can rely on, like, usually traditional finance, like some sort of agreements, contracts, arrangements that obviate that problem. You've got, perhaps there is some things on the back end where you don't know which parties are working on what. Maybe developers are anons. Do you think there's anything there? Or any comments you'd like to make in response?
I think definitely, the DeFi should be better at communicating how things work. Like, it's a notoriously hard to understand sector. I think, the big difference is that these protocols, or those who are actually DeFi, they are open source. The software is there for everyone to see and verify and check and see how things work. So yes, they're oftentimes, most times, these teams are not, very diligent in the way that they are communicating exactly, everything that happens, for sure. But at least the code is transparent and users are able to, but it's not just a white paper, in open source building, the code is there for, like, the protocol code, the smart contracts, they're deployed on chain. Technical users, yes, you have to be technical, so you have to rely on auditors, you have to rely on other developers to check this, and that's a big problem for the everyday user. But the information is there, publicly available in open source software and publicly deployed smart contracts to be checked and actually see how things work. The advantage of code is that once it's deployed on the blockchain, that's how it works. That's different from, Claudia mentioned Robinhood. That's different from something like Robinhood, which can unilaterally change the rules, as we saw happen exactly with the GameStop stock. Robinhood suddenly, decided to stop trades, causing massive losses. In DeFi, in this whole kind of crisis and crash and mess that happened, well, all of CeFi was suspending withdrawals and, again, like, unilaterally making decisions for their users. DeFi continued working, as intended. Smart contracts continued executing. Liquidations happened in an orderly manner. Nobody was banned from withdrawing their deposits from any DeFi protocol. I think this past crash was a huge testament to how much better DeFi is, because everything just worked. And as intended, there were no surprises. And, users could continue, withdrawing, liquidating, managing their liquidations, and so on. So, yeah, I think it's a really complex area. I think there needs to be a lot more disclosure. I think communication needs to be a lot clearer, because it's only readily available for very technical users who can understand this open source code. But the big difference is that the code is there to be checked and verified.
Nice. So what we've got emerging here is kind of where I wanted this to go. We often hear statements made that one is transparent, the other's not transparent. There's actually a lot of nuance. Like there's different dimensions on which things can be transparent, and they're usually spectrums. Even within the DeFi ecosystem, as you said, Cami, like there are some teams that do a better job of certain elements in transparency than others. So it's not all like a uniform space. Some are doing better than others, but then what's the standard at which we measure it? Well, often people will go and say traditional financial services is transparent on X, Y, and Z dimension. And then we've got other things in place to like have recourse if transparency is not possible or is taken away. So it's a nuanced topic. It's hard to make definitive statements.
I think like recourse is an interesting topic, right? Because in DeFi, you don't have recourse. So that's something that you can argue, you know, DeFi could be a lot better at. It's like, okay, like something goes wrong, there's a hack. You know, there's some vulnerability that was exploited, or, you know, something happens, or you send your money to the wrong address and you're stuck, you know? Yeah, there's no kind of customer call center or authority even that you can go to. So I think that's a huge difference with CeFi and traditional finance.
It's starting to change a little bit, right? As we've seen, like some foundations, open source software foundations, some developers ultimately held responsible in some cases. We're starting to see that change. It's not the way it used to be. We've even seen law cases emerge around NFTs, thefts of NFTs. So like the traditional legal system is like starting to be used as a means of recourse in the DeFi space.
Yeah.
As part of it getting bigger, right? And more prominent and more being at stake. I'm conscious that there's one topic, Claudia, that I know that you've been looking at a lot, and it's one that I wanted to bring up in this podcast because it's a good example of transparency or where there's not transparency, and it's a great little case study. It's a concept called MEV. Now, that's a concept we haven't really brought up before on this podcast. So if you just stop for a second and explain what that acronym stands for, and then conceptually, like, what is it, why does it happen? And maybe from there we can talk about, well, what solutions there might be, if any, to get around the issue.
Okay, so let me take a step back. Whenever you finalize a transaction on a blockchain, is because either miners or validators, depending on the system, intervene and form a consensus around the transaction. And this allows for the trustless authentication. And these miners or these validators are also responsible for choosing whichever transaction gets in a block. They have a pool of pending transactions that's called a mempool, and they basically get to pick and choose. At the very beginning, it was fairly easy to pick and choose because some transactions had higher tips in Bitcoin that the person sending the transaction was giving to the miner to make the transaction go faster. So the miners just aggregated whatever had the higher tips so they could keep the tips. And this was fairly transparent. But over time, miners started to get wiser to how the system worked. So they started doing stuff like a sandwich attack, which basically means I extract a transaction from the mining pool, which the user wants to carry out at a certain price, but I sandwich it between two transactions of mine that, for example, are going to, you know, get me a profit and get the user the worst price possible, because at first I make the price go down and then I make the price go up, or vice versa, depending on my interest. And there's other practices like front running. I mean, it's all stuff that in traditional finance is straight up insider trading. It's having an informational advantage over other participants in the market and exploiting this advantage to make money. This is only my opinion. I mean, there is no legal case bringing testimony to this in a final way. The Bank for International Settlements had a paper suggesting that some practices involved in MEV might be insider trading. My idea is that regulation that protects ordinary retail customers from getting the worst price possible from intermediaries is there for a reason, which is the same reason why crypto exists, which is to address imbalances in power. So it's kind of annoying that MEV should exist. And one thing that really struck me as odd in the DeFi space is that I've heard important founders, like people with a substantial intellectual content defend this because it incentivizes the miners to stay online. But come on, I mean, at the expense of the little guy, whereas others want to abolish this practice. And now Ethereum, but only Ethereum, has a solution provided by a company that's called Flashbots, and they're working on something that's called a proposer-builder separation, which basically means that there are professionals who build the blocks and other professionals who validated the blocks, but it's not the same individual or entity, so there's no conflict of interest. And proposers should optimize for something that is not their own profit, and this should break the cycle. But I don't see how you can leave that in the hands of just trust in people's good faith. How do I even know, considering that validators are anonymous, that the proposer and the builder are not part of the same company? I expect some companies to, have the whole supply chain and keep on doing the same thing that you did before Flashbots and before PBS. And then I love the idea of Flashbots. It's genius under some profiles, but it's one company. Talk about decentralization. I mean, I would like to have 4 or 5, and 90% of Ethereum clients are going to install the MEV Boost, which is Flashbots product, if I'm not mistaken. So basically, this is the problem of problems in terms of transparency and fairness. And I think that on this, you really need regulation, because in the mid space, the final settlement of all transactions is done via central bank accounts, which are, of course, heavily regulated, and central banks, at least in civilized countries, don't make a profit of final settlement. In crypto, you don't have a central bank, and the idea that final settlement can be non-neutral and produce profit, which is beyond the incentive for mining or validating, like staking yields or mining rewards. This really doesn't work. And this is not a question of understanding code or not. This is a question of having access to privileged information. So basically, if I want to see what's in the mempool of Ethereum, I have to run a node, and or I mean, maybe I can also do it online less efficiently. But there is a cost for seeing and understanding this, which is not. I mean, not everybody can afford it, and it's even if I can read the code perfectly, if I'm not in the position of power of having maybe 500 proposers and 500 builders and 500 validators, I want to be able to get a fair treatment, which is, I mean, this is a pet peeve of mine, but I think there must be, traditional market regulation adapted for the new infrastructure, but it's something that has to be done.
So this is a nice example here. And the reason it's nice is because you see problems that have been seen in traditional finance emerging in this other space, like front running and sandwich attacks, which is making me hungry. The other element there is the flip side to transparency. Anyone can see the mempool. Technically, anyone can run a node, spin up some software and participate. Now, Cami, we just heard like one avenue you could go down is to try and like regulate it, which is it's one avenue. There's another avenue, and it's that you go and write software or make changes at an applicational protocol level that kind of obviates the various causes of these issues. You've got your ear to the ground with the Ethereum dev community and the DeFi app devs. Is this something that they are, well, they must be, I know they're aware of it because of the proposals to do something about it. Do you think it's like, out of all of the things that are changing over time, do you think this is one of the priorities going forward? Do you think it's something that can be solved at technical level? Or are there other ways in which one might kind of minimize these kinds of challenges?
I think there's a lot of work that's being done on this area. It's definitely a priority for lots of builders, and Flashbots is one of a few other projects working on solving this problem. So I think, you know, I'm just personally, I think a technical kind of market solution to these problems is usually more effective than, you know, regulating it in a way that was built for another sort of financial system with different characteristics and different infrastructure. You know, maybe it's a combination of both. Maybe some regulation is needed, while other, you know, private individual projects are working to improve this issue. But yeah, I mean, the things have definitely improved with Flashbots and these other projects, and there's work to be done. I think Claudia's points are really kind of interesting and relevant. Yeah, like you don't know whether all sides of the equation aren't in conflict still with the Flashbot solution. So that needs to be solved. But I maybe there's a way of doing it without kind of this, you know, top-down regulation coming in. I wanted to ask Claudia whether a proof of stake changes anything for MEV.
Well, my impression is that the possibility of collusion within the ecosystem is not really going to change, because of course you could have, I mean, you're not going to be looking for mining rewards, you're going to be looking for staking yields. But this doesn't really change the problem as far as I see it.
Okay. Yeah, I think it is a big problem. I think it's really unfair that kind of the little guy is at a disadvantage versus those who are validating or running nodes and have, you know, privileged information on as to what's happening in the mempool. It's true that, you know, at least anyone, you know, it is public and anyone can run a validator, but I don't think an everyday user of Ethereum should, you know, have to be running an Ethereum node in order to get a fair price. You know, that's not, you know, practical. So yeah, I think it's a big issue, and I think it'll have to be probably a combination of both. You know, some regulation coming in, though it's hard with Ethereum being just a global network. You know, like how to regulate it, who regulates it. And so I don't know if those are all kind of like outstanding questions about DeFi and blockchain in general. So that's why I think just like solution coming from within the space, from these kind of individual projects, from, you know, the market, are usually more effective.
But yeah. I was thinking, just if I can ask you, Camila, a little question. I think there's a couple of companies that are working on solutions that start from encrypting the mempool. I mean, you both said everybody can run a node. Yes, if they're rich, but I mean, you still need these 32K, etc., etc. The idea of encrypting the mempool just will make everybody equal. And I think maybe, I mean, I haven't given thought to the legal structure of this because I'm not a lawyer, but maybe this is a typical thing. You mentioned we don't want regulation that was thought up for a very different system, and I totally agree with you on this. But maybe regulation that just says, you know, mempools have to be encrypted. Would that work?
I think so, but you know, again, I think it's something that if it's something that's better and that benefits users, it will be adopted without the need of someone having to kind of enforce it. But you know, if that's something that kind of needs to happen for the system to be more fair, and if it, you know, all it takes is encrypting the mempool, yeah, I think that's kind of a viable solution that's that's kind of in line with the technology and not trying to kind of fit regulations that were created for something else.
Do you think over time one DeFi app would just simply implement a technical change like that, and then all the users look at it and say, well, I don't want to have this front-running attacks on me, so I'm going to use that platform that solves the problem. And over time, people essentially vote with their feet or their wallets is another way to look at it.
Kind of optimistic, because I don't think many retail traders, even on DeFi, know about the exact nature of front running and about, you know, the losses associated with it and how it works. I mean, you're imagining a perfect information world, which is which will be great, but that's actually not the case. I mean, my main qualm, I love crypto and I love the ideal of crypto, but sometimes I find it too optimistic in terms of, you know, people who have power are going to try to abuse it, which is one of the premises of crypto. And we forget that this applies to within crypto as well. So, yeah.
So we're coming up on time. Claudia, I'd invite you just in a couple of sentences, if there's like one thing you'd like readers to take away from what you said today, or from like your ongoing work in the space, from the perspective where you sit.
One final takeaway, I think we need more interaction between the regulators and the crypto community. And I think this podcast was a great example of this. And I'm really grateful that you organized this, because we need to bridge each other's knowledge gap, language gap, and the bravado and the confrontational tones definitely need to stop, because otherwise we're never going to go anywhere. But unfortunately, I see from most people in both spaces a lot of posturing, and it's not bringing the cause any forward, either party's cause.
Well, with that, I think we're out of time. I hope everyone found today's podcast useful and informative. As a reminder, if you'd like us to cover any topics of the future, or if you'd like more information, you can use old school email, cryptoclarified@wisdomtree.com. You can find Cami at Cami Russo on Twitter. I'm at Benjamin Dean. Claudia, thank you for joining us. How can folks find you on the interwebs?
I'm on Twitter, Claudia Biancotti, or Un Gatto di Piombo for those who speak Italian. And so just hit me up on Twitter and on various Discords around the crypto space and Hearthstone.
Excellent. Well, Cami, good luck this week with the merge. I imagine you've got a very busy one ahead of you, right?
Yeah. We're also having a merge party at the DeFi headquarters in Brooklyn, so that's something else that we're planning.
Very cool. Well, enjoy that. Thanks again to everyone who's listened, and we hope you have an excellent day. Ciao.
Oh, thank you.
Bye.